Hello and welcome to Investors Hangout, brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Today we are discussing a very important topic, and that is the promise and perils of small cap funds. With me is the CEO of Value Research, Dhirendra Kumar. Dhirendra, welcome.
Thank you.
And I've touched upon a very sensitive topic for some, and I would like you to evaluate or define the meaning of small cap funds. What are these small cap funds?
First and foremost, the small cap is actually not for some. The last big
so it
boom
is
that we
big
saw.
For some, huh?
It's big for some. More so, it's very delicate issue right now because most investors got attracted to mutual funds in recent times, and they were in large number, and they were attracted by the lure of how the small cap funds did in recent past, particularly 2017. And they saw that big numbers, 100% return, funds doubling in 1 year, one and a half year, 2 years time, and they started investing, and ever since we saw the decline. So they are questioning this whole premise that we got started with these and they turned out to be very disappointing. That typically happens most of the time whenever you are attracted by recent performance. But yes, the small caps, they are promising and it has its hazards. Small cap funds are the funds, where now it has been well articulated by the regulator that these funds should invest in smaller companies, and smaller companies quantitatively are defined as companies which are, if you list companies by market capitalization is the worth of, if you had all the money, how much money it takes to buy the whole company. Right. So if some companies' market cap is 7 lakh crore, so if you have 7 lakh crore, theoretically you can write a check and buy that company from all the shareholders based on the market value, the price of the stock in the market today. So based on that market cap, small caps are supposed to invest in companies excluding the top 250 companies, and 2/3 of their money should be invested in those companies only. Those are defined by the regulator as companies which are small, and based on the average market cap of the previous 6 months. So they are supposed to be investing 2/3 of their money in smaller companies.
Okay, so mandatorily also they are supposed to have minimum of 65%.
That's a law. That's a law. That's a classification thing which got articulated, and they have to follow that.
Okay, so
but 1/3 can be elsewhere.
I was coming to that. So of the 35% that is left, then it can be
invested anywhere, and understandably so, for practical reason, because smaller companies, stocks can be very liquid. Sometimes you want to buy something worth, you want to buy 1 lakh shares of a small company. You may be able to buy it with difficulty, but when you want to sell it, you may not be able to sell it with ease. At will. So in that sense, selling small company stock in large number in large quantity by mutual fund can become difficult. Having this enabling provision of having 1/3 of money to be invested elsewhere provides liquidity. Also provides essential, diversification, because all said and done, small caps, they have the promise, but they come with, a catch that they could be extremely volatile. There could be wild swings. And so having that 1/3 provides liquidity and provides, insulation against the wildness.
Okay. So Dhiren has articulated as to what small caps funds mean. My next question to you is, and I want us to go, one by
sequentially
one about, what are the advantages to a common man like me and those who are watching us? What are the advantages or the promises of small cap funds, and what are the disadvantages or the perils of a small cap fund? Since that is our topic, and if you could elaborate on that.
No, the promise of a small cap fund or a small company which you buy early is that, think of HDFC Bank. It got created in 1990, 91 or so, and it was a small bank. Nobody knew how it will shape up. And it went on to become one of the largest Indian bank in the previous 30 years. So if anybody who would have bought it as a small bank, a promising bank which was organized better, was actually conducting
when it was a small cap.
then that is the charm of it. The charm is that you buy a small cap company, or there could be many hundreds of similar examples where you picked a company, held it through a small company turning big. That becomes a phenomenal thing. That actually is it creates wealth. The peril is that for every HDFC bank there could be another bank which destroys your wealth. There will be a company which will actually it fails to the promise or what you expected it to. And small companies are more vulnerable. They lack the robustness, their ability to withstand a cyclicality. They lack the reserve, they lack the acumen, they lack the ability to withstand, because businesses are cyclical. How do you withstand a decline or a down cycle? Are you able to and how you avoid mistakes? Most businesses are vulnerable to learning on the go, in the sense of different contexts, different changes, market dynamics, or obsolescence, standard business risk which a business is exposed to. And in that context, that's most companies are unable to. That's why you have fewer great companies. And so the joy or the rewards of spotting a company which is small and turns big is huge. And the peril is that many of them don't.
Okay. And are these funds cyclical?
It's bound to be. Markets are cyclical. Different sectors are. The economy is cyclical. So they are bound to be. Okay. The small cap turns out to be even more cyclical for the specific reason that less information is available on these companies. They are small, they are held by few people, they are grossly under researched. So when in a good market, when in a rising market, people spot a small cap and they find it promising, they are willing to, because smaller companies, because of their small base, they grow faster. Assuming that you are selling something worth 100 crore. It's easier for a 100 crore company to actually grow it by 25-30%. But once you turn big, once you become 5,000 crore, it's very difficult to actually grow your sales by 25%. That will be very difficult. So smaller companies, if they have the momentum, if they have the tailwind of economic cycles which is favorable, you benefit from that, and investors are willing to pay a huge premium for that, because smaller companies, people discount the future. People believe that investors think that these companies, if they sustain the growth that they are registering now or they are witnessing now, this will turn out to be something phenomenal. The problem of this is that when the tide turns, when the cyclicality, when the favorable condition of the economy or the markets or the sector turns unfavorable, then we see a decline. Then the reversal is just as sharp. So if the stock price goes up by 100%, it can well come down by 60%, and that is something which never happens with a very large company. So they turn out to be far more intensely, they register wild gyrations as compared to larger companies.
Okay. If they go to such extent that, for example, they may give you 15% at a high, and even over a period of time, as you're saying, despite being cyclical and all that, after some time, if we average it out, it is still pretty good compared to other funds.
Absolutely,
So why not go for small caps only?
It is very unnerving.
So अगर जिगर strong है तो carry on.
नहीं, जिगर strong से ही बात नहीं होता है, because investors' heart, it has to be tested. It doesn't happen. It cannot be the result of an interview that you can say that, do you have a strong heart, and everybody will say in a rising market, yes, I do. And the moment you are faced with a 50% decline, you say, I was not, or you were not comfortable. So two things needed for this. One is that understand the concept that smaller companies hold the promise. They come with the risks that some of them will actually fall by the wayside, and that is part of the game. That may not do well.
Fold up.
How to deal with it? Okay. The way to deal with it is build a diversified portfolio, which mutual funds deliver you efficiently. Okay. Then they are extremely cyclical. So in investing through the lean time, if you buy small caps every 5 years in the up cycle, you will never make money. investing through the bad times, and that cycle could be longer. It could be 2 years, 3 years, 4 years, 5 years. And the reward of investing through the lean times of the market in a reasonable quality, on the belief that the fund manager is doing a diligent work of choosing reasonable companies which will not disappear. They're they're doing their best. You don't have a control on the economy, the performance and other things because they are so external to the company. But you definitely have a reasonable control on the management that you have chosen, whom you have entrusted your money, whom, you have to look yourself as a partner.
Okay.
And whether the fund manager is doing that job diligently. If he does that, and so it requires experience. It will not happen, and you cannot borrow the experience of other people. You have to really experience it yourself, because that is when you have the belief. Borrowing other people's experience, howsoever we may say on Investors Hangout that hang on to the small caps for the good times, it won't happen. You have to really see, until you are able to register that why it happens, how it works, then only you can develop a belief. Because the moment you see a 40% decline, you will say, the real notional loss of your investment portfolio is something which scares you, which scares you away from those funds forever. So, experience matters. And if you have seen the bad times and you can actually understand that despite those bad times, these funds are able to deliver substantially higher, hold on to them.
Okay.
Otherwise, keep off. Keep off the small caps. Most investors can do without them, because if you buy a multi-cap fund, it has some adequate allocation to small caps. Even if you buy a balanced fund, it has some allocation to small caps. So most investors can do without it. This is meant for a specialist, understanding, thoughtful, experienced investor.
Okay. So does this include the suitability of a person?
Yes.
What I mean is, who should invest?
Yes.
Who should not invest?
Yeah,
apart from what you explained, are there other criteria?
No, that is it.
That's it.
That is it, that you should have experienced the market for 5-6 years. You understand the cyclicality. You understand you believe that small caps will do well. More importantly, yes, one more thing, that you have the time frame for your goals. If you need the money after 3 years, and if you are greatly impressed with small caps, it's not meant for you anyway.
So, would you like to lay down some ground rules for anyone who would like to invest in them?
Yeah, I would say that now we have, earlier it was not possible. Last market cycle, many small caps, micro caps did not lack the history. Today you can see them. And don't look at consistency of these funds, but look at long-term performance of these funds. And two things which I would like investors to check before investing in a small cap fund. Yeah. The fund manager is still there. The fund should not be very big. Very big meaning, I would say that I will ignore a small cap fund which has turned bigger than 2,000 crore. 2000, 2005, because looking at small cap, finding adequate volume, quantity and spotting opportunity, it gets difficult, because even a 2000 crore small cap fund will actually have nearly 700 crore in small cap and mid caps, because only 66%, and understandably so. And building a small cap stock portfolio with even 1200 crore is a challenging thing. So because they come, you can't really have 200 crore position in a small cap company, because then you will end up owning a substantial part of the company stock anyway, because they're supposed to be small companies. Finding too many ideas in small cap is difficult. So you have to start with the assumption that the fund manager will look at 20, 25, 30 ideas, and 4 or 5 of them will actually be blockbuster.
Okay.
4 or 5 of them will be duds, and rest of them will turn out to be okay. And this itself will actually enhance your return. This is the assumption on which you should. So, 2-3 things. One is that don't look at a big fund. Don't look at these small caps if you cannot invest regularly through the bad times, and the bad times could be horrible. Sometimes you will find
as
them
we have witnessed.
As we have witnessed, they will fall by 10% on a single day. They will fall by 5% on a single day, and if you are getting worked up on that, it's not meant for you. Third is that looking at these funds, doing this exercise, making sure that whenever the fund manager leaves, you have to worry. Maybe you have to change. Maybe you have to move all your money if the manager changes, because In these funds, the fund manager actually plays a very dominant role. In case of large cap fund, mid cap fund, bigger funds, you will find that, fund managers have a portfolio where the positions could be 50-70% common across funds. In these funds, he has to spot an idea. He might just be the only holder among mutual fund of those ideas, because the small cap universe is huge. And you lose a fund manager, you lose the knowledge. And in these companies, knowledge, conviction, and the knowledge which compounds by a fund manager holding a stock over a period of time, that is very material. So I will be extremely worried when a good small cap fund and the manager leaves. I'll be ready to jump out.
So how do I track?
Rather quickly.
How do I track?
You just
keep an eye on the.
No, you don't have to work very hard on all this. Just come to Value Research online, set up your alert, track your portfolio, create your watch list. That is it. Whenever there is a big change, any such change, you'll get to know.
So make sure that you have an account, right?
Register free and set up your portfolio.
It's free. Make sure that you are there at Value Research. The other thing is about we being at the cusp of a golden run. Are we at the cusp of a golden run? I mean, I know nobody can predict and all that.
No, I can predict.
So let us know. If we are.
I don't know whether it is, we are at a golden phase of the stock market, or the markets, or the economy in general is round the corner or not. But whether it is round the corner in the sense that in 3 weeks time, 4 months time, 4 weeks time, 6 months time, but it is definitely there. I'll tell you why. We have seen a huge operating system change for our economy, for the businesses. And the result of this is that good businesses will get premium. We have seen this huge thing which has come our way, that corporate tax in India has been brought down in a fairly, in a substantial manner. This translates into, a company which was generating 20% return on equity, which means shareholders' money lying in a company, and the company was generating 20%. That 20% goes up substantially forever in future, simply because now they have to pay less taxes. And that reduction from 33% or, with all the surcharges and other things to 22% is a huge, and that we saw that readjustment. But I don't think that readjustment is very objective. A lot of companies, the worth of that corporate tax rate cut will accrue and will have far different meaning over a period of time, because they can multiply the money much faster. The return on equity on more retained earnings will have a different meaning. Then I think, there's a fundamental change in the way the businesses, the way they conduct their affairs is changing. Honesty, integrity, good governance, good conduct
it's coming into play
and will get rewarded. And the bad guys will get phased out, or they will get marginalized. They will. Third thing is that big businesses will turn bigger, simply because what has happened additionally is that new businesses being set up by an existing business, or new operations being set up, that is liable for 17% tax rate. That is phenomenal. It will not happen tomorrow. It will not happen in 6 months. But it will definitely happen, because now this is a global advantage created for the Indian businesses. Whether it happens in 2 years' time, 3 years' time, the realignment, I don't think there was any surprise in terms of the GDP numbers going down, economy slowing down. Mind you, we are still growing. The growth rate has come down from much higher levels to 4.7% or 4.8%, and these are not estimates, these are actual statistics. But despite that, these are still growth rate. We are still growing at 4.7% or 4.8%. It's not a decline. It's a decline in the pace at which we were growing. That's one.
Okay.
The other is that
sounds very optimistic. I'm feeling so relieved listening to it.
No, think of it that you got a salary hike of 10% last year, and this year you got only 5%. But
that doesn't mean you have no hike.
Yeah, no. It doesn't mean you lost your job. It's being made out to. Of course, in this country we need a higher. I'm not justifying it at all that it is good or bad. Just that it was bound to happen for the obvious reason. The way houses are being sold, which is very people-intensive activity, that definitely has changed forever in this country. Big builders are in jail, which we could never imagine that they could be. Businesses, what is the real estate bill? It's saying that, when you have land, then only you sell your property. When you take the money, tell them how much square feet are you giving. It is just the obvious. And if we have to really be transparent, tell them what you're, and if you don't deliver on time, we will, we will penalize you. We will, you'll have to pay for it. You can't really get away with nonsense. Basically, most of the thing is all about telling businesses that you can't get away with nonsense. Bankruptcy bill. If you borrow money, if you don't pay on time, we'll sell your assets. That is what happens to individual all the time. And that never used to happen with businesses in this country. That has started happening. For the first time we are witnessing the bankruptcy bill. We have seen big businesses going to the cleaners. And so if this will not translate into a slowdown, what will? If we think that we will, and this is a big change, and it's
responsibility. Take responsibility for your actions. Do it.
Do things well. And that is what individuals do. They pay their taxes on time because they don't have a choice. The TDS gets deducted. You really can't fudge things. Look at GST. So I think they are very big changes, and they are permanent changes. They cannot be reversed, and it was bound to cause a slowdown. How long will we take to get out of it, get used to it, and then get running? I think there is a hope. The banks will actually banks are in the business of raising money, taking deposits and lending money. They are not finding credible avenues. Let it be. Banks should not be distributing money where they don't get the money back ever. Let there be a slowdown. Let it come back in a natural course. Of course, government needs to look at it proactively, so that bring the growth back, make people optimistic again, streamline things, clear the glitches. But if it is happening, let it be. I don't think the way around this is that let's go and distribute money in the economy. Let's start lending once again and never get the money back. And that is not growth. That is not sustainable growth. Whenever it comes, I think India will get into a kind of momentum. Whether it takes 1 year, 2 years, 3 years, growth rate comes down, growth rate stabilizes, or we become a slow growth country once again. Hindu rate of growth is back again at 3%. I really don't mind that. But this is something which will owe to our future generations. That they will not be embarrassed about. They will not be embarrassed about being born in India, which is made up of dishonest businesses.
That's a strong statement that Dhirendra has made, and with this optimism that Dhirendra has expressed, I come back to my last question related to those small caps. Should one invest in them today?
One should invest in small caps. Who all? As I said earlier, you should have the experience, not necessarily just an investment time frame of 5-7 years and more. So if you have seen what has happened in the market and to the small caps, and you understand you can withstand this, by all means, and don't come back to value research and say that you said so.
All right. So we move on to the Q&A part of our program. This question is from SM Telang, and he says, I'm a retired person with some SIPs in small cap funds. Since I'm retired, should I stop investing in small caps? If yes, where should I move my money?
Ideally, as I was saying, that somebody should have the experience, but at the same time you're saying that you have invested a very small part. I don't know whether it's 5%, 10%. But if you're comfortable and if you have seen the big decline, you understand. And as I was saying as part of the discussion, that anybody investing in small cap needs experience. Just the understanding that they can fall freely is not good enough. You should have experienced it in the past. Then by all means continue a small allocation. Otherwise, move all your money to a set of multi-cap fund or balanced fund. And by now, the kind of decline that we have seen in recent times, you would have figured where you stand, what you will be more comfortable with.
Okay. Vinod says that I've just been blessed with a baby boy and I want to invest 5,000 rupees per month in small cap fund for his higher education. Is this the right choice, Dhirendra? He asks, or should I get into multi-cap funds?
It could be a right choice. As I said, that the rider is, are you experienced enough? For this kind of goal for 20 years, 18, 20 years, by all means. But small caps, what I did not explain earlier was small caps will require a review. Every 2-3 years you should look back. You should be watchful when the fund manager changes, and maybe be prepared to get out of the fund. If a fund manager to whom you can attribute the performance of, if I have to attribute the performance of a fund to a small cap fund manager as compared to a large cap or a multi-cap fund manager, I would say that I will attribute 90% of the performance of the small cap to the fund manager as compared to 60% to a small cap or a large cap, a multi-cap fund manager, and maybe 40% to a large cap fund manager, because your universe is so well defined. You know that a large cap fund manager has to look only at the universe of some 70-80 companies, and that is it. And as compared to somebody who is looking at 2,000 companies, spotting some, finding the variables, making sure, and then betting it with money, and can land into a lot of issues where people will point their fingers that why did you buy it? Because people don't look at the stock performance as compared to a company performance, and a fund manager can only make an estimate about how a company is likely to do. So in that sense, it's a very responsible position, managing a small cap fund. So yes, if you understand this, you have the experience on your side, and you will not falter and be on the watch every 2-3 years, by all means do that.
Okay. Raman Singla has written saying that I have a sum of 10 lakh rupees with me, which I want to invest in 5 different small cap funds over a period of 1 year through a systematic transfer plan. And this is going to be for his retirement, which is 25 years ago. Is my approach okay?
Your approach is okay, except that I would like you to choose 2 of the 5 than actually 5. Because the underlying stocks will actually, in small cap funds, it's very hard to find 5 great small cap funds. Of course, there are quite a few, and focus on 2 of these 5, and your underlying position will actually be just about 45-50 stocks, and that is good enough.
Okay. Our next question is from Dinesh Bhatia, and it says, I want to invest some amount for the marriage and education of my grandchildren. Kindly advise.
You can actually invest in any multi-cap fund, a multi-cap fund, or but depends. If your grandchildren are 5-7 years away from their goal of getting into their serious education, which will require this money, then maybe a balanced fund. If that is 10 years to 15 years away, maybe a multi-cap fund. And you can also, do this investment in your name and gift it to them. And when they become major, the advantage of this is that your children will not be actually lay their hands on this money till your grandchildren attain majority. Right. And so that's another plus while investing in mutual fund, that grandparents can gift the funds to their grandchildren.
That's all we have in today's program. Till we meet next time, it's goodbye from me, Rajesh, and Dhirendra.